Mexican peso recovers versus U.S. dollar before coin toss. U.S. election. All right, good morning. How are you doing? 9:15 a.m. and I'm out of coffee. Oh, no. So welcome. Comment Televue, how are you? Hang on, I'm getting strange errors from the stream gods. No, looks like everything's fine. All right, cool, right on. So, hey, what do you want to do? Gold, oil, Bitcoin, US dollar, Japanese yen, Swiss franc. You're like, oh, but Wayne, I want to do Ethereum and silver. Well, you just have to ask. Be the squeaky wheel. My name is Wayne McDonald. I will be your guide on this journey we call trading and investing in Forex. Lots going on in the world. There's an election tomorrow. There's a Fed meeting on Thursday. Yeah, Thursday. Kickstart the FX trading day for NOV 4WA. Technical look at Euro US dollar yen, and pound US dollar. Yeah, sounds like me. We're brothers of a different mother. Anyways, so, hey, let's get on with it. Let's get ready to change this world and make it a better place. Oh, is David going early today? JP? Is he going early? Interesting. I didn't notice that. Anyways, hey, let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Oh, hey. Yep, that's me. Yeah, so JP, does he want to do that every day? Like every time? Or just this time? That's interesting. Hang on, I've had a rough day, haven't barely eaten food. Okay, just looking through some of the news out of Europe. PMI, horrible. This one's actually quite good. Good job, Spain. Unemployment, 7%. Wow. Wow, terrible. 47. France, 44.5, just crazy bad. Germany, 43, crazy bad. Yeah, that makes more sense on Peter. But yeah, so if Peter's going to do it, what do he wants to trade the opens?
Gold bounces due to U.S. dollar weakness as odds of Trump win fade.
So for those who have no idea what we're talking about, we have performance coaching, right? Yeah, we have performance coaching. And yeah, okay, so he's even rescheduled it too, which is cool, which means he knows how to do it. It's good. All right, so we have performance coaching, and Peter focuses on trading E-mini futures. And that makes sense, trading it at the open. Yeah, so if you guys got to go to the performance coaching with Peter, please choose him over me. Okay? And all members of traders.com, all members have access. Yeah. All members. So that's really cool. Right on. Okay, so what we focus on here at traders.com is that we analyze fundamentals to determine the underlying intrinsic trends so that we know what to trade, what not to trade, why we're trading it, and we can also discern whether we should try to let our winners run. Like a classic example of this are the risk gauges, right? Or this morning we went over the commitment of traders report, which shows you the cash flow of institutional investors, right? So like we can make logical determinations. We have scalping tools that analyzes the volatility and patterns inside of news events like today's RBA interest rate decision. Okay? But we have technical trade setups too, like scalping. And we have implied volatility that updates real time to show you entry and stop placements. We do technical analysis, like pattern recognition, on 7,500 charts. But as I showed you, we also have coaches, okay, live performance coaching, sometimes 6 hours a day. Most of the time, 5 hours a day. And we have 100 hours of training courses. Like, gee whiz. Well, now that you've made a decision on what to trade it, why to trade it, and how to trade it, you're going to need an execution partner. You want an ECN. Traders Way is an ECN. It provides straight-through processing. They execute your trade on your behalf into the interbanking system, and they do not trade against you. Makes sense, but it's actually unique in our business of retail Forex trading. So you need strategy, tactics, training, okay, and an execution partner. So let's just take a look. We got the market opening pretty soon. We can go to like indices, for example. And we see a non-directional pattern here on ASX with a potential for a downside break on multiple time frames. FTSE on a 15-minute chart, it's been heading down all day, but we're in the zone now for a potential buy. Do you guys trade FTSE? Okay. That's what you'd want to be looking for. Okay. Not sure if you missed that or not, but that's on a 15-minute chart. Okay, how about this one? I'm going to ask you, okay, does this mean the likely outcome of this pattern is up, down, or sideways? Please answer up, down, or sideways. Okay, we are getting a few different answers. So if you look at the description below, let's do this. youtube.com/@Forex.Today. Say something, I'm giving up on you. All right, so we're right here. This is us. Giving up on you. Oh, wow. That was good. All right, right here. This is what you want to see. Build trading muscle memory. Download our chart patterns for free. Opens up a window like this. It's beautiful. Okay, you need this. This is a guide. It's free. I spent about 4 hours at a Starbucks doing that for you. Hanging out with my daughter because I'm a good papa. All right, so what does it mean? What does it mean, Basel? Okay, it means there's a high potential of down to up to down to up to down to up and to down. So the answer is down, down, down. And as I've explained 100 bajillion times, what's really happening is on a different time frame, a higher time frame. And what's really happening is a down, a pullback, and a down. Let's see if I can make that fatter. Down. Okay. So, there you go. Oh, for show. Okay, cool. Cool beans. Boom, 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 boom. Okay, Nazi. Ooh. Okay. Looks like a potential for another break lower. Although rumor on the street is the market's going to be good today, but based on what's happened recently, it's still, it's still got lots of bearish pressures. Nikkei wants to rise. I see that here on the daily, but not on the hourly. So confusing, right? Well, it's got to fall to hit here, and then it'll rise. So when you look here, it's going to fall down to 37,000. So even much lower than this. And then from 37 up to 41. That's how you read it. That's, hey, man, that's not my opinion. That's just the pattern. Dow daily, we're saying that's a pretty significant break because we're all the way back down to that level. Let me draw that. Okay. So a breach lower would be very bearish. Gets us all the way back to 40,000. So these markets are still heavy. I know tomorrow is going to be the important thing because the election. Yeah. So all this is to me is a tightening up of liquidity while we wait for event risk to pass. What do you guys want to do next? Forex, crypto, stocks, or commodities? Let me know in the chat. What do you want me to do next? If we're done, that's it. What do you want to do next? I'd like to remind people that I will not be doing a live stream on Thursday as I will be I'm presenting a lecture at the St. Louis Fed on Thursday. And so I want you to notice when I'm not around. Ashish has got it right. All right, first one to answer gets the juice. Okay, triangle breakout. That's non-directional. Triangle breakout. I'd almost argue that that's more of a way. It's close, anyways, but definitely more down than up. Falling wedge. Definitely an opportunity for bears on Litecoin. Everything on the small time frame for crypto down. Falling wedge Litecoin 30, 88.15. Okay, channel down. These triangles are non-directional, so I see either neutral or down. Now Bitcoin different here. Channel up. There's an opportunity. Ethereum. Channel up. Notice these came out 3 hours ago. This came out 1 hour ago. So we're already in play and they're already working. You should have noticed them, I don't know, 3 hours ago maybe? I mean, this stuff updates, right? Okay, Ben wants to talk about Australia. Okay. All right. How are they doing based on inflation? What do we see here? Bitcoin, an up to 75. Ooh, and then some profit taking. Interesting. So it seems most things on the short term are quite bearish, except for Bitcoin and Ethereum. Yeah. Okay. All right. Let's go fundamental here. We have a question about Aussie. Okay, fine. I wish I was special. You're so very special. But I'm a creep. I'm a weirdo. What the hell am I doing here? Okay. Okay. Australia, 2.8. But they feel like it's going to go up. Unemployment rate, 4.0. You know, the thing about Australia, it's really interesting. They have very low productivity. Yet wages are high and nobody lost any work. It's really strange. Like, it's really not how it should be. So I don't know. I don't know how they got to that type of situation. Like, they're at 4.1% unemployment and they're still adding jobs. What? Okay. GDP is better in Australia than Japan. But technically, it's definitely down and getting worse. So now it comes down to the outlook. Okay, Ben? And, well, we're not quite seeing imports from China. And so even though this asset typically goes up all the way to December, it's bearish. And it's very bearish. And it's becoming more bearish. And the yen isn't even really strong. It's just that the Aussie's weak. So when you read the data out of Australia, you know, they kind of, they're in a situation where I don't think they need to cut. Inflation is still too high. It's higher than most of their competitors. And the outlook doesn't look good where, I mean, so you'd say that you'd cut interest rates maybe to spur the economy, but they're at full employment and they have high wages. So they need to get those wages down. So the headline number's okay. It should be lower. But I think they need to get wages down, and if they can't do it when the economy is economy is struggling on their exports, how are they supposed to do it when there's a boom again, right? So they're not quite where they need to be. Yes, it's not 10%, but inflation was only 10% because of a breakdown in supply chains. Yeah. So rents are too high in Australia. Wages are too high in Australia. Food costs. Okay. So one of the things I've been telling you guys for about 18 months is that as we move out of COVID and into the new era, you need to own things like tangible things. This eventually, I think the stock market is not going to perform as well as it has been. But real things include gold. Real things include real estate and land. Real things include food. Things that you can actually use. And so you watch, when you look at the data in Australia, food is expensive, housing is expensive, energy is expensive, wages are expensive, and productivity is low, and companies are not laying people off. And a lot of the economy is being floated by an increase of government expenditures. So you're like, the numbers I think are a little deceiving. It looks good only because things haven't improved the way they need them to. Okay? Okay, but it's nice to be able to pull that up and look, huh? Cool, right? I know. Let's go back to technicals. Again, if you need to go to Peter Ward's session on trading the S&P 500 at the open, please do that, okay? Okay. That's strange, huh? Boo, 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 boo. So this is one that I want to sell. And what this is showing is the selling pressure is probably wimped out. Okay. We got down to support. And it held. Why? Well, it's support, bro. And so the big question now is, if it starts making higher highs, then it's going to be a threat to bears, right? So once again, the pattern isn't it's going to do that. It's that if you're a bear, you're under threat. Now, why would you want to be a bear? Well, something like 80% of the market is short. Institutional market. We are at the annual projected high. And we have a double top at the annual projected high. And I expect by the end of November, unless tomorrow is a total shit show, US dollar will be weak. So what am I trying to get to? On the medium term, and this is just the hourly chart, right? But what I'm suspecting is that. So I'm going to have to look at higher time frames, eh? Higher than the, right? Here's a 30-minute, same thing on a 30-minute, 15-minute, same. But also look at already on the 15-minute, we're already getting back into the wedge, which is precisely what I want. Okay, that's precisely what I want. We want to stay under the previous high, you see? La, 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 la. Cool beans, so that's good. Okay, but again, those are smaller and smaller time frames. Yen looks heavy today, huh? Yeah, that's interesting. I don't know. See, I'd buy the dip on that, but that's me. That's 3-drive emerging pattern, huh? Higher highs followed by profit taking, it looks like on Kiwi. And no more peso? Really? Let's check the second page. Hey, do you remember last week there was like 4 pages of patterns? I'm like, holy schnicker. All right, here we go. This is a little better. Now, this is a channel up, and I want this to go down. So this is still not bearish, right? So what's in play here is this pattern. And at some point, if it makes a lower low, then we want to look for a lower high. And that's just not there yet. Okay, on the 4-hour, not quite there. Okay, now traders.com threw that out to you, yesterday, and it's been true. It has come down, and now if you were a bull, you would take it this way. Okay, but if you're a bear, for the reasons I showed, institutions are buying peso. We're at the annual projected high. It's in fact double topped. And so, imagine if you were trying to trade this, eventually you want to see this pattern that we have now. You want to see it, sloped that way. And definitely that's when you would get aggressive. And you catch that yield, huh? Whoop, whoop. Hey, think of it this way. Interest rates in the next year are definitely coming down in the United States of America, which makes the carry trade better and better and better on the Mexican peso. Plus nearshoring. Okay? Plus increase in demand, plus a weakening USD. Oh, it could be a nice little trade. Okay. The risk, of course, is Trump wins and people say, uh-oh, Trump's going to put a tariff on Mexico. Okay. Well, it could happen. All right, let's zip over to commodities. Silver. Beautifully bearish, coming down wonderfully. Okay, an hour ago, traders.com gave you the heads up and said, look, we're in a selling position. Nice, falling wedge. Okay, identified at 8:30 in the morning. Should be on our way down from 33 to 32. But remember, that's just this leg. It's not the actual, right? I mean, this could go, well, let's say, how about 30? Well, how about 25? Well, we don't know yet. This is just a tip of the spear on a 15-minute chart, right? That's just the next leg down, not the target for the trade. That's not a trade. That's a pattern. Okay. Oil coming down. Are you going to buy a dip at 71? Ooh, that could be interesting. 71.15 could be an interesting buy a dip scenario. We'll see. I'll have to come back to that. Okay. Monster move here on Brent hourly. So how do you trade this? When you get a monster move, okay? You want to see a pullback and then continue mission. And very often you look at old support and resistance and you kind of eyeball like that. Cool, right? I get it. I got it. I know it's good. My rhymes are tight. You wish you could. I went into the locker room during classes. I broke into your locker and I smashed your glasses. How about Brent here On the 4 hour, whoa, 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 whoa. See, it's an up. Got ourselves a little up arrow, a little butterfly, which is in this case an inverted Gartley. Oops. So what you do is down, 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 up, sell, down, 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 up, sell. I think it'd be more like this, like an inverse head and shoulders, but it can come down a little more and then do it, whatever. But that's what the pattern is suggesting. But notice it's already got some up. It's already got some legs under it, huh? You see that? Yeah, we're up here already, 75.5, huh? Didn't even get a pulley. No pullback on that one. And same thing, my WTI. What do you think? Do you think there's a correlation there? Yeah. Looks like the same gold dang pattern. The only thing different is the price. Yep. So this is fundamentally driven, this move to the upside. It's not technical. It's not the pattern. It's not like the butterfly failed. Because remember, these are all emerging patterns. We see them before they happen. We see them while they're forming. So sometimes they form, sometimes they don't. And that's usually the issue of fundamentals, not technical. So what's the green candle all about? Well, over the weekend, OPEC said that they're not going to increase production. Bada bing, bada boom. You should know that. You should know this. If you don't know that, you need to get angry. Gold, dig it! That's weird. That started out Homer and then turned out that like that kid from South Park. It was supposed to be go, but then it. Got two different voices going on. Okay, most of you guys are risk neutral. Thank you for completing the form. I appreciate that. I see the votes coming in. Looks like we're, I'd like to have some more votes, but I mean, it's pretty good. You know, I'll end it. It's quite, everyone is like there are some that are on, some that are off, but about the same. So it's like 1/3, 1/3, 1/3, basically. Okay. With uncertainty with the election, I wonder why you'd be aggressive today for those that are risk on. I don't believe institutional investors are deploying capital right now. I mean, that's just as simple as it is. Institutional investors that move the markets are not going to make a giant bet. What's the point? And think of these guys too. They already make, I'll make up a number. They're already making $20 million a year personally to babysit grandmother's pearls. They're not going to get paid much more to gamble client money on the outcome of the election. And if they did that and gambled and lost, they're certainly going to lose their cushy $20 million a year job. So that's not what they're going to do. If anything, they've gone to cash over the last few weeks on some of their positions. They've probably hedged using things like futures and options. Let me show you something. Let me show you, yo. I preach to teach because some of you never had this. Check this out. You ready? Look at. The options market is positioned to make money if the stock market tanks. Hey, is that a hedge? Okay. And when you look at the COT report, okay, which I'm sure you have, and I know I'm being snarky. If you haven't, then I'm not sure what you do when you wake up in the morning on Monday. Maybe you did it on Friday afternoon. Okay, maybe you did it over the weekend. Maybe you did it this morning. But if you don't review the COT, I don't get you. I don't get you. You're like, wait, you don't care about institutional positioning? Well, we went through this again this morning and noticed that there's a lot of going to cash. Okay, there's lots of institutions going to cash, but they're not necessarily shorting the market. They just sold assets and now they're holding cash. And I'm certain they're going to deploy the capital back into the market once they know the outcome of the election. And to me, that doesn't suggest a great time to be incredibly bullish. So again, so maybe those that said they are bullish, risk on. Okay. I guess you're either looking for some vol scalps, right? You trading the vol, you're buying the vol. Maybe. Maybe you're just doing short-term trades while we wait. That's fair. And tomorrow, especially tomorrow night, we're likely to get some action. What I've seen in the past is the action doesn't stick. And the real move is the next day. But we don't know. Every year is different. So maybe you're just trying to get some trades in there. When I said in the past, though, there was a possible front run opportunity, I meant 1 or 2 weeks before the election, not the day before. Institutional investors are not front running. When you listen to the news, they tell you that the US dollar was strong in the month of October because the market was certain Trump was going to win and that he would create tariffs and that would strengthen the dollar. Well, the logic of high tariffs, high dollar, that makes sense. But what they're missing is, well, for some silly reason, I predicted U.S. dollar strength in the month of October, and it had nothing to do with Trump. So, oh my goodness, you got to be very careful with where you get your news and your data. And very often, you'll listen to TV. You'll listen to quote unquote the experts on TV, and they'll tell you ice cream sales are up significantly. Therefore, it got hot outside. And they'll say, there's evidence. Look, ice cream sales doubled, which increased global warming. And now because of ice cream, the temperature of the earth has gone up 5 degrees. And it's all due to ice cream. Is that true? No. Did they both happen at the same time? Yes, it got really, really hot outside and ice cream sales went up. But did it get hot because of the ice cream? Or did ice cream sales go up because it was hot? See? And so what I even just listening to CNBC this morning, they were essentially telling me because people are eating more ice cream, it got hot outside. Because the dollar is strong, clearly it's the Trump trade. No. Not in my humble opinion. Or I got a good crystal ball that could predict that 10 months in advance. Well, let me tell you, I don't think I have a crystal ball. I think I have data. Okay? And I think you guys would rather have the data than like, I'm going to sign up with Wayne. He's going to be my guru. I think you've had it with gurus. I think you've had it with YouTube live streams and they're like, hey, I got my training course. You should sign up for my training course. I think you've had it with all that nonsense. I think you just want the data. Right? I'm not your guru. I'm the chief economist on your trading desk. Yeah, there's a big difference, isn't it? Yeah, hoping yields are going to come down. Inflation's okay. GDP is too hot. Ugh. But I am interested in buying dips in the gold. At the Sam's Club. I got the gold at the Walmart. Okay, and you can see I have up, up, or up. Up, up, or up. Okay, I wonder if we're going to get a turning point anytime soon. I mean, this is a big deal that it's dropped to the neckline for sure. So it either survives or it's going to have a reasonable drop. I don't know. Okay, but I still think that the primary demand here is central banks trying to stimulate their currency without cutting interest rates. So this goes all the way back to Ben's question. Hey, Prince Ben, are you still here? If Australia wants to stimulate their economy, but they don't think they can cut interest rates, then one of the things they could do is buy gold. They can buy gold and weaken the Australian dollar, making Australian exports like iron ore and coal more affordable to buyers such as China. Yet, the balance sheet hasn't changed. So if they bought $1 billion worth of gold, now they have $1 billion Aussie dollars, right, of gold in the vault, but now they have $1 billion Aussie dollars less in cash. So cash goes down $1 billion, gold goes up $1 billion. The balance sheet's still balanced. Nothing's happened. They just converted dollar to gold. But what happens to the value of the Aussie dollar? The Aussie dollar falls because of the supply of Aussie dollars in the interbanking system has gone up. And until China starts buying iron ore and coal, that Aussie dollar will weaken. So I look at this and we talked about it earlier. On the surface, things look okay when you look at the data. Now, remember, I actually read the reports, and that's where I get the soft data, the softer data. So on the surface, it looks good, but if you look at actually what's going on, things are not good. And so how can you address some of these things? And you're like, so why is the Aussie dollar so weak? Well, it could be the central bank buying gold. Could be. And weakening the Australian dollar. And therefore, now the downside is that creates inflation, so they don't cut interest rates. Oui, ho, ho, ho. You see? This is good stuff. Yeah, it's good stuff, huh? So once again, no live stream on Thursday. Friday, I typically do a live stream at the FX Street YouTube channel, and I think I should be able to do that. But once again, I know you've heard it for the bajillionth time, but I'm excited about it, I guess, as much as I can be excited. I'm doing a lecture at the St. Louis Fed in front of at least 400 university professors. And I'm teaching them how to teach, or teaching them how to improve their teaching. So anyways, that's neat because my BHAG, my big, hairy, audacious goal, is 20 years from now. I'd like to teach economics at Harvard. And so, when I get interviewed, they're like, well, what kind of teaching experience do you have? And you're like, oh, well, I work for the Fed actually teaching university professors how to teach economics. Sounds like a Harvard thing. Ba 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 ba. For the Fed talk? Oh, you mean mine? No. No. First of all, it just seems to be the MO for the Fed to keep everything private. So I've been to about, 7 meetings at the St. Louis Fed. I guess that's why they know me now, right? They don't tend to record or keep notes. It's, I'm not sure why, really. Now, this isn't really a speech. I'm leading a workshop. I mean, it's half. Like I'm giving university professors an example of an exercise they can do with their students and follow that up with a paper and all that kind of stuff. So, but it's not like a typical presentation, It's like, I don't want to come across to the audience that I know more than they do. They know more than I do. They have PhDs. They're tenured professors at, of economics. They've been teaching for 20, 30 years. Like, dude, I am not the smartest person in the room. And so it's more like a suggested, methodology and a tweak in concept. In particular, like I'm thinking even the first lecture of their semesters, right? So it's not me presenting research of did you see what creates levels of inflation, or hey, here's my thought on how to improve sticky inflation or something. So I see that for them, it's a private audience. Okay? You understand it? I don't even know if it would look good. Me lecturing to a bunch of professors. But whatever. Hey man, this is what I do for fun. Other people golf. Now, I'm not a bad golfer. But not many people that I know. I don't know anyone that's been invited to speak at the Fed. I know lots of money managers. I know lots of hedge fund managers. So I'm kind of excited where I will always have that flex, which is kind of cool, actually. I mean, seriously, right? Some people buy a Ferrari because they're like, look at me, I'm so amazing, I have a Ferrari. For me, as a trader and as an investor, it's a hell of a flex to do this. So I'm not very emotional as a person, but like I'm almost happy. I'm almost excited. So anyways, I still have to do the work and I have to get on stage and actually do it. And there's 20 minutes of Q&A in front of 400 PhDs. They're just going to rip me apart. Oh my God. Because I'm actually going to go in and do something that's unconventional. And you know I'm walking into the lion's den, right? Yeah, well, thank you guys. Yeah, I think it is cool. I think it is huge. I think it's cool. The biggest thing is that ultimately I would like universities to teach economics better than they have been over the last 50 years. And with a slight tweak in methodology and even mission, I would like to see a more diverse group of people study economics as their profession. I want to see more young people moving into economics because they want to impact public policy. Because government spending, and really by spending we mean investment, right, dictates whether money goes into your community or not, for example, right? It matters. This stuff matters. And that's what I'm trying to get across. It matters. It impacts not just, government spending and business spending and consumption. No, we're talking about the availability of quality jobs in your economy, the longevity, like how long do you live before you get sick and die? Do your babies die or not die? This is part of economics and public policy. Are you happy and engaged with not just your neighbors, but in society in general? Do you have an entrepreneurial society or one that will steal from its neighbor? Education levels, housing, affordability of housing, right? All these things matter, and they're all economics, because economics is the study of scarcity. And so how you study, but even I'm sure who you study. If it's 90% old white men, well, you're going to maybe get a bias. Not that it's done intentionally. So maybe we can attract young people, more girls, more people of color, and to study what really, the public policy that impacts all different communities. And it's real, it truly is real and impactful. So that's why I'm doing this presentation at the Fed. I literally told them all of this. Self-worth and dignity is what I'm talking about. And they're like, holy smokes. And I'm like, I want, for example, I said, young girls and people of color to be, they might be going into this class because it's required. It's for, these professors are teaching freshmen, so you're required to take this class, but they have all these other majors. They're going to go study some other thing for 4 years, and they never even considered economics. And right out of the gate, I would like to entice and attract them into this profession of the study of scarcity and the allocation of resources through public policy and research. So this is what I do for fun. So yeah, it's a flex, but imagine if I was able to make that small tweak to an industry that impacts millions of young people every year, because they're taking this econ class. So if I tweak it and have just a small impact, it's magnified, because not only is it millions of people this year, it's millions of people every year. So it compounds, you know? Okay. Well, you know, Peter, by the way, did you do a 9:30? Did you do a 9:30? Everyone's like, oh, Peter's doing a 9:30. And I'm like, he is? Seemed like you changed it to do a market open. But as far as the calculus, I found that I didn't do calculus in economics until grad school. So for undergrad freshmen, there's no calculus. Yeah. Yeah. Yeah, Peter, you you dropped it down an hour, not up an hour. Yeah. All right. Oh, 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 oh. All right. We will look at the stock market. And a big wick slammed into the M2. And you see this? I did this last night, you all, where we have it come down and up. Cool. Oh, it's worse for Peter than anybody else. Peter's got it worse. Yeah. Yeah. Just bump it up, right? All right, cool. So we have definitely tested this area. You see, I got it all marked up. And right here, it's all been marked up. We did this, last night. And so now it's like, can we get to here? And then if so, okay. It's still a long shot, but it's in play. Because you need to look at it like we're essentially range bound. Huh? Okay, you see this bottom, this top, bottom, okay, bottom. You see? And then you really want to then breach, pull back, long gone. That has not happened yet. This is bearish on this time frame. This is bearish. There is no doubt about it. Okay. NASI on our level of support. Obviously, last line of defense. No diggity, no Dow. Okay. Very dangerously set up for a head and shoulder. So one of them is down. One of them is maybe down. One of them is maybe up. I don't know. This is a mess. I did gold, but did you guys want to look at silver? Okay. This is what I did last night, once again. And when I say last night, it's because I do a technical trading group at traders.com. So on Sunday night, we meet. So this has all been done, 12 hours ago. So if you're kind of feeling like you want to be a part of that, please join. Okay, so we're hanging in here. Not bullish yet on this time frame. And we haven't made a higher than that high. Okay, So it'd be interesting if you be range bound a little bit and then up. But of course, we know all this is going to change with the election. Yeah. So you could drop into a smaller time frame and trade it here. But even then, it's not even that good. It's not even that good. I just want to show you how hard we held this back. You see all the lines? Yeah. And Bitcoin went up, touched it, and stopped. Now, if you are going to be a bull, it's very dangerous after a double top. But if you were going to do it, 67.5 is probably an interesting zone for you. So have it drop another $500 to $1,000, and then maybe buy a dipsity doodah. I don't know, man. I don't know. You could also argue here, but I don't know. Really, what you're trying to pick up is this 21. Okay, but hey, man, nothing else looks that great. I mean, Ripple looks down, Ethereum looks down, Litecoin looks down. Oops. Yeah, how about that? Solana? Yeah, maybe. But it seems like if everything else is coming off. See, what's happening is people are going to cash. But if we're just going to do technical analysis, okay, if that's what we're here to do, then this part of the pattern looks more up than down. And this is a buy zone. But of course, we know tomorrow's all about the election. Today's about the market freezing up. Yeah. Dollar weakening, which is hopeful. Okay, it's hopeful. So you see we came down and did a 618 Fibonacci retracement, le flitulumum. And that should get us up high. So I'm going to take this off. So we said dollar would be strong in October and weak in November. And today is hopeful for that idea. Euro dollar. Okay, we got to get through this before truly on the free and clear plan. But we gapped up and okay, gappers can be riding this to the up. Pick the time frame you want. Cool. Aussie. See, a lot of these are on monthly pivots. Again, I covered all this last night. We went through all of them. And you're like, look at this monthly pivot. Look at that monthly pivot. Yeah, very, very interesting. But that's that. I don't want to overhype it. I think you should be more conservative than aggressive. I think it's going to be an interesting day. But again, I don't want you to overtrade. I don't want you to take too much risk. I want you to be patient, disciplined, and conservative. If you're going to trade, I don't know, smaller time frames. If I were trading, I would lower my lot size. I'd get in on the smaller time frame like it's a scalp or a spot. Like an intraday trade, like you don't care that much about it. But then I don't think I'd take profit. I think I'd move my stop to break even quicker than normal, remove the risk. But I think I'd hang on to see if I can get lucky on the election. I mean, like a little 25 pip trade is not going to make a difference to your career, but it would be interesting if suddenly your little pissy little scalp turned into a 500 pip trade, because you were able to hang on to the election, and then the election goes your way. You just kind of get lucky. Well, you know what? Swing for the fences. So like my laissez-faire attitude would be, yeah, I'm trading before the election, but I'm not really trading before the election. I am, but I'm not. Okay, like that's the attitude. And then get the half decent trade in there, remove the risk, and just go ciao. I am not an American citizen, and I am not allowed to vote. I can be drafted, yes, but I can't vote. So anyways, have a wonderful day. Peace on earth. May the pips be with you. May your profits be above average. Be careful out there. Please be careful.